Director Hassett, great to see you this morning. And I know you've been saying post in reaction to this surprise loss in jobs that you're mostly looking at the unemployment figure, and it fell. However, as Mike just pointed out, labor force participation also fell, which is the reason that occurred. So looking at the figures and the state of this jobs market, are there any areas at all that you are concerned about?
Right. Well, first of all, I've been talking about these numbers with Mike for how many years, Mike? 20 years. And so he really does raise some good points. And the thing that I would say is that because of our border policy and because of deportations and the retirement of the baby boomers, then labor force participation is kind of on a downward trajectory, which means that the break-even jobs number, that is the jobs number you need so that unemployment rate doesn't go up, has gone from maybe 120, 130,000 a few years ago to maybe about 40,000 now. And so what it means is that what the market is used to looking at, it's like a normal tread the water kind of jobs number if it's around 100, is no longer true. If you get a number like 100, then that's really like a great number, and it should make the unemployment rate go way down. And so that's like the technical big picture. Digging into the numbers, there are some things that really jump out at me. That it was like private sector job creation was, right about at the break-even positive number. It was government employment that went down a lot, about 50-something thousand. And the other thing is that we see in the hospitality sector, the end of the World Cup is really clearly in the data too. If you exclude those two things, you had about 100,000. Number, and that's consistent with all the other indicators, like the purchasing managers being really high, unemployment insurance claims being about the lowest they've been since World War II. All these other indicators suggested, the market was right when it expected around 100, and given that there's just a minor correction that gives you about 100, I think suggests that's what the truth will be. But we need to see future numbers before we can make a final judgment, and that's why it's great to have a person like Mike around to help us think about that.
I agree, Kevin, for what it's worth. I absolutely agree.
Well, predictions are hard, especially about the future, as Yogi Berra said. We're both economists. Let's get wonky here. The possible growth, potential growth for the United States or any country is based on the size of the labor force, whether it keeps growing, and productivity. And you're taking credit now for the size of the labor force essentially going down because of the immigration policies of the administration. So is that a good thing for the economy overall?
Yeah, I mean, what's going on right now is if we do the old potential GDP calculations, then you add productivity plus capital deepening plus, labor force participation or labor's contribution. I think that one of the things you see in productivity is that it's probably running north of 2.5%. Capital spending probably adds at least 1% to that. So before you get to the labor story, you're looking at a 3.5% GDP number. And I think the labor story is still going to be positive. I just think that it's not going to be as positive as it typically has. If you go back over 40 years, the labor story adds about like 1 or 1.5% every year to GDP. I think now it's likely to be about a half of that or a third of that.
Essentially,
and you see that, by the way, you mentioned the hourly earnings. If you look at the weekly earnings, they're actually up relative to inflation quite a bit, about $1,000 overall for all Americans, about $3,000 for manufacturing workers, $4,000 for construction workers. And so there is something going on, too, where people are something in hours that's going on that's offsetting the participation.
President watching in the Oval Office is just saying, you got your point in, Kevin. Good job about that.
I don't know if he's watching, but I'll find out, I can tell you.
The people we've talked to so far today are basically saying this is a non-event, even with the negative number for the Fed, because it shows the labor market is stable, if nothing else, and they can focus on inflation. I'm wondering, though, why the president is saying things like Kevin Hassett can do what he needs to do. The labor market was stable under Jay Powell, and the president was really mad at him all the time. Why is he giving Kevin Warsh so much more runway, even though conditions haven't changed all that much?
Right. Well, I could say that the president, there have been some news stories that the president's talking to Kevin Warsh, and of course he is. And he talked to Jay Powell, too. But the other thing is that Kevin Warsh and the president have a very close long-term relationship from New York City, from Florida, and they talk about the economy all the time, and I talk to Kevin as well as does Scott Besson. And so that's like not really news. And the fact is that there's somebody at the Fed now that the president is 100% sure is going to do what's right based on the numbers and not play partisan games. And
Dr. Hassett,
heard me mention some of the partisan games that I think they played in the past.
I just wanted, apologies for jumping. I just wanted to pick up on the point of the conversations because you mentioned about the economy. Are they talking about monetary policy as well, or is it just like broad economic advice?
I've not been listening to the conversations, but I'm sure that the president doesn't say, "Hey, you got to do this or that to interest rates." He respects the independence.
Well, given that line of communication is open, I wonder if we could do a little bit of scenario analysis. Let's say that this Fed does hike. There was an FT report saying that perhaps the chair, Warsh, might hike if the data continues as it is for September. What do you think the president's conversation would be like with Fed Chair Warsh should that happen?
The president is going to respect the independence of the Fed. I'm highly confident. And when it's very, very natural for the president to do something like say, hey, Chairman Warsh, what do you think about today's job number? And that's a very normal thing for him to do. But I think that's the way you should think about the bounds of the conversations.
Forgive me for asking this, but I've been dying to ask you this question since you brought this up last Friday. You said that the biggest danger to the economy is that socialist, communist Democrats actually have a big victory in November. What is socialism in your mind?
Well, you know, Mike, that I, as CEA chair, wrote a chapter about it in the economic report of the president. Was widely criticized because people said, oh, there's no way the Democrats are socialists. I didn't say Democrat anywhere in the report. I said, here's the risk of socialism. But then I wrote a book, The Drift, Stopping America's Slide to Socialism, because I believe socialism, we are sliding towards socialism through that party. And so socialism is when the government owns the capital and then hands it out to people, is a very simple definition. And so let's just say, hypothetically, the government decides to have grocery stores where it sets the prices and tells people like when they can get in and get the cheap stuff. The history of this is that the grocery stores end up being empty. Prices don't matter because there's nothing to buy. And over time, socialism leads to, public disorder, and you see it in Venezuela, you see it in Cuba, and so on. And so it's a terrible path to go. But I think that what people underappreciate is that the policies that have been advocated by Democrats since President Trump took office, where, hey, you could have wealth taxes, you could have really high taxes on income, you could have really high taxes on capital gain, that they've been basically sliding towards socialism for a long time. And so while the new people are a lot more charismatic than the people in the Senate, I think the policies that they're advocating, Medicare for all, come on, Hillary Clinton's healthcare policy was about that, right? And so that I think that's the uncomfortable thing that Democrats have to come to terms with, is that these socialists are actually advocating things that Democrats have advocated for a long time.
Well, if government ownership of means of production is part of the definition there, then the Trump administration has taken shares in Intel, MP Materials, Trilogy, Metals, Lithium Americas, and they've got the golden share in U.S. Steel. Why is that not socialism?
Yeah, because it's not control. So, for example, the Norwegians have a sovereign wealth fund. They own maybe about 3 or 4% of U.S. equities. That's not socialism. They're not going in and telling the management what to do and so on. And so I think that one of the things that President Trump and Howard Lutnick have noticed is that in the end, the U.S. would be way better off if we have something like a sovereign wealth fund. And we're certainly putting up firewalls to make sure that the government can't come in and micromanage those firms.
We just heard from Rick Reeder of BlackRock, you know him well.
Yeah, I do, yeah.
We need to see something on the fiscal side to try to get the economy moving and companies spending again. Does the president have any plans to propose something like that, or are we kind of stuck until after the midterms, and or if the Democrats take control of one of the houses, we're stuck for 2 years?
I think that Rick's call for some kind of stimulus package, I guess I haven't seen what he said, feels completely inconsistent with all the data I'm seeing right now. And so I'd have to see what Rick was saying. But right now there are, obviously we're watching closely the welfare of the American people, but we haven't had meetings where we talk about a stimulus bill.
Director Hassett, it's often that great leaders need to be ones who surround themselves with people who can deliver them hard truths. And it's a strange time in this economy. Many things are changing, be it AI or impact of higher oil prices. I wonder what those conversations are like. How often are you coming to the president and delivering him advice that's maybe hard to take, that parts of this economy maybe need various efforts? How often are you having those difficult conversations?
I obviously can't talk about specific conversations with the president. I was in the Oval with him last night. We talked about a wide range of issues, and he doesn't really have much patience for yes men. And so when you go into a meeting in the Oval, the one thing I can say is that you cover a wide range of topics and a wide range of opinions, always.
All right, what do we think is going to happen now with Iran? And the reason I ask that is because everybody also that we have talked to says that, boy, it would sure do a lot if we got that war over with and prices came down for energy.
Mm-hmm. Well, again, I'm not involved in the negotiations with the Iranians. I don't have any insight. It's not, that's stronger than yours on the specifics of the negotiations. I could say that we've done an enormously good job stabilizing global energy markets despite this disruption by doing things like increasing production through pipelines, getting the Jones Act waived so that American energy can move to the coast. And that's one reason why, while energy prices are higher than we would like, they didn't go nearly as high as a lot of the people on your shows were saying, right? People were saying we're going to be stuck at $150 oil just a few months ago. And so I think what that means is that all of these steps that we've taken, increasing energy production, especially in the U.S., means that when this is resolved, then prices are going to drop a lot. And I think that that is something that's being priced into futures markets, and it's actually affecting decisions today because if you buy oil today somewhere, then it usually takes about 2 months to be shipped. And so it really puts a downward pressure on prices today.
Now, I got to put you on the spot again one more time here in an area that you do follow, and that is the budget for the United States. The president's budget would add a lot more to the debt. That means more bonds have to be sold, and we were just talking with a lot of people this morning about how much private debt is coming to the markets, especially from the AI sector. How much do you worry about interest rates going up and the country having to pay a lot more because there's a lot of demand for bonds right now? A lot of demand to sell them, rather.
Well, I mean, the point is that what the president has done is he's put out a budget that gets the deficit to GDP down to almost nothing over a 10-year window. We've taken significant steps to achieve those goals by, for example, reducing federal employment by more than 300,000 workers. And I just got a briefing on the vice president's fraud task force yesterday that, wait do you see, there's going to be tens and tens of billions of dollars just in a year. So multiply that by 10 to get the deficit effect of fraud that we've stopped, that the vice president's team is stopping. And so we're 100% focused on the deficit in the long run. But we also, at times, when we spend less money on international organizations, we can spend more money on the defense things that keep us safe. And so we're changing things, within the bundle, but we're definitely shooting for lower deficit over time.
Just combining these two ideas, Director Hassett, of taking action and what you were mentioning before with higher oil prices. This is a president who has signaled out big oil, both Exxon and Chevron specifically, amid this ongoing crisis. What steps is this White House going to do in order to act on the idea that big oil is contributing to the inflation we're seeing in higher prices?
Well, I think that, big oil is heavily concentrated in the U.S. It's something to keep an eye on. But the bottom line is that the global energy price story is a positive one compared to what people thought. And I think that the things that made it positive are going to make prices drop very, very quickly once this is resolved.
Director Hassett, when you say too concentrated, they're just too big. Is it kind of an antitrust issue, you think?
As an economist, you could look at something like the Herfindahl Index and just think about what share of the market does any business have, and that's something that is a source of investigation for people at the FTC and the Justice Department. It's something that's within the purview of the NEC.
Understood, Kevin. Thank you very much for your time this morning. That's the White House National Economic Council Director, Kevin Hassett.